back with Bobby and JJ Radio. If you miss any of the earlier interviews, you go to bobbyandjjradio.com. Be a fan of our show on Facebook, Instagram, Twitter. We have a really special guest coming up, Mr. Oscar Tijerina. He was raised in San Antonio, went to UT Austin to get a BBA in finance. He is married with 3 kids, lovely wife. I've met her. And he's currently the senior VP at Bank SNB here.
And very familiar with neurosurgery, right?
Yeah, he's a jack of all trades, master of none. Pretty good poker player, actually.
I'm lucky. I don't know how to.
Better be lucky than good.
I was there. He was lucky.
It was better to be lucky than good, I think. Either way. So Oscar is he has the finance background. He's worked with banks all over the United States, and he's kind of the guru when it comes to stuff like that. So I want to dive right into it since we have you. I want to extract some knowledge from you. Let's say I am a business owner. Let's say I want to buy a commercial property. How do I qualify, or what do I need?
Oh, that's a great question. I think that the first thing that you got to think about when you're looking at doing something like that, from a bank's perspective, what we're going to look at is, typically all banks look at what's called the 5 C's of credit.
Sure.
I don't know if you heard that before, but it's character, capacity, capital, collateral, and conditions. Now, I'm most concerned with the first one, character.
Sure.
What kind of person you are.
So I'm out.
Yeah, you're out.
Yeah, so but in that is what's your history, what have you done before, what's your history, capital and capacity, that's having to do with the finances piece of it, and collateral, what are you trying to finance, what are you trying to buy. So
sure.
So those are the main things, and what I mean by that is if you're a business owner and you've done business and you have a history of showing that you can actually run a business, be cash flow positive, and you can demonstrate that not only by saying it, but actually by your tax returns,
right?
And finances,
like real numbers,
not just stated numbers, but real numbers.
Right.
Then a bank can take that information and make a decision about whether they want to become your partner in a sense.
Sure.
Because we are actually putting out capital ourselves.
So you're becoming like a business partner in most cases because, I have the business and you're trusting me that I'm going to continue through recessions or depressions, and I'm going to keep on trucking the whole way through. So that's why character is so important, you felt.
That's absolutely. My first mentor in banking told me, he said, Oscar, you make loans to people, not company.
Sure.
Because at the end of the day, a company's not going to pay you back. A person is going to pay you back.
For sure.
And so, and you're right. We are, a lot of banks say we're relationship driven, and what that means is, we have to become a relationship with our business owners,
right?
And we're there as another facet to help them grow and do their business.
Sure.
In this case, it's capital.
And so, I do commercial real estate. When I'm talking to clients, and we do a lot of tenant rep, what is the benefits of owning versus leasing?
Yeah, great question. I think some of the benefits would be obviously that you can control your own property and your own destiny from that standpoint. Also, if you do finance, you're building equity towards something that you actually own that
sure.
that later on, if you need to, you can sell or monetize in some way. And then also, there's some tax deductions from an operational standpoint that you can take advantage
sure.
of, from that standpoint. And then, on the flip side, on the con side, your flexibility is kind of taken away a little bit, right?
Right.
So as a renter, you can kind of move to the next best deal
right.
whenever you need to, or get out of it. Your capital, is now stuck in this piece of real estate versus when you're a renter, you don't really have to do that.
Right. We talk to some people and say, look, if you're looking to franchise, you want to do a proof of concept and move on, right? You don't want to just be still. It's to be anchored into one location. You want to show a bank, say, look, I made it happen in this much square footage and this type of demographic, and now I can do it again.
Exactly.
And sometimes when you're all tied up, now you're trying to sell a business and real estate at the same time, and it gets a little tougher, right? And
absolutely.
So that's the pros and cons.
So Oscar, can you talk about what SPE is and how it protects an owner?
Well, it's a special purpose entity. Most of the times in what we do on the commercial side, and I got to say that I'm not a lawyer, I'm not a tax accountant. I'm just saying what I see is that SPEs are used to actually purchase the real estate for liability reasons for the most part. So as a business owner, you want to limit your liability to someone getting hurt or whatever it is and then suing you personally. So they set up special purpose entities to house that asset and thus kind of putting a box around the liability side of it.
And take us through a quick, run through. I'm buying a commercial property. Is it the same as residential, like survey, appraisal, underwriting timelines? Is it pretty similar?
It's very similar, and yes, all of those are absolutely necessary to close a commercial deal, and know that there's a cost involved with that.
Sure.
And in this case, quality does matter. So if you're going to have to spend a little bit extra money, that's okay.
Right.
If you're going to get the quality people to do the work.
Because you're going to need some people that aren't focused on that, people that actually focus on the commercial side doing those different types of things.
Right. It's completely different than residential.
And I always hear fixed rate and floating rate. What are those two?
Well, I mean, just what it sounds like. A floating rate floats with the market. So, a lot of times it's either a prime rate or a LIBOR rate. LIBOR floats kind of on a monthly basis. Prime is set by the Fed. Mm-hmm. Right now it's 3.25 times, and you can either go prime plus or prime minus. So that's it moves up and down. And obviously a fixed rate, you'll fix it for a certain amount of time, and you know what your interest costs will be. So it's just kind of a plus. Typically, fixed rates are higher than floating rates, and so you have to kind of think about that.
See how long you're going to be there, and it's kind of going to go into the whole construction of what you're trying to do with the whole project.
Exactly.
So there's a lot of things that you need to talk to, but the person you need to talk to is Mr. Oscar Tijerina, and you can call him at 210-442-6127. You can also contact him at oscartijerina@banksnb.com and check out all the different types of information at banksnb.com. We'll take a quick break. We'll be right back.